Hi, this is Corey Litzenberger from CGL Strategic Business and Tax Advisors, or online at cgltax.ca, coming to you with our first installment of what we hope to be many videos, giving you a little bit of tips here and there on advice, and we want to make sure that we talk about things that are relatively timely. And so to add that to that effect, I must tell you that this is currently November 2011, and so we're giving our opinion based on the information at that time. So right now, this time of year, many trade shows, hotel, conference rooms, social media outlet advertising are trying to get you to think about reducing your personal income tax for the calendar year. But in many cases, it is the same old model of buyer beware. Some cases are these so-called tax shelters. In many cases, they tell you a great story on how you'll be doing a great service to a charity, saving a life, and at the same time reducing your income tax to the point where you'll get a huge refund check from the government. What a great idea. Step 1, you take out a loan, through their financial affiliate, of course. Step 2, you purchase a fill-in-the-blank, product, investment, medicine, equipment, etc., with the loaned proceeds from their wholesaler. Step 3, you donate this wholesale purchase, which you never actually see, to a charity that they have this agreement with at retail value, and get a charity receipt for the retail value instead of the wholesale price. Step 4, you file your income tax and you get a large refund bigger than the loan, which you repay with your refund and keep the difference for yourself. But this sounds too good to be true. You're told, don't worry. They have a tax identification number given to them by the Canada Revenue Agency. However, they don't explicitly tell you that a tax shelter identification number is no different than getting a social insurance number or a GST number. Just because you have one doesn't mean you're not breaking the law. Well, I still believe I'm helping a charity, but what happens if I get audited? Well, they'll tell you that they have a team of lawyers to protect you if you get audited by the Canada Revenue Agency, and that they've set up a reserve fund to assist with the legal costs if you get reassessed. Now, if you read the fine print in your agreement, which no one ever does, but it will state that any shortfall of the reserve fund for legal costs will be required to be paid by you. So, technically, if the reserve fund only had $1 in it and the expenses are greater than $1, you're on the hook. It is also commonplace that they will blame you or your tax preparer for incorrectly filing your return. Tax shelters have to be recorded on specific schedules on your tax return that normally don't come in your general tax return package every year. Most of the time, if you don't know what schedule it's supposed to go on, and it's not something that is common, and it's not something that the government's going to send out all the time, because if it's not common, they don't want to waste the money on the paper, you probably haven't filled out the schedule. As a result, many personal tax returns that are trying to claim the tax shelters are filed incorrectly. At the end of the day, if they're filed incorrectly, is it really their fault? Are they going to go to bat for you? We strongly recommend that you consult your accounting and legal professionals before an undertaking of any kind on purchasing these types of schemes. I hate to come and see these in March and April and then have to advise the client of the risks that have been involved. Chances are they will be reassessed. Maybe not today, maybe not tomorrow, but they will. At the very least, if you really want to help a charity, send them the check yourself. I'm Corey Litzenberger with CGL Strategic Business and Tax Advisors out of Red Deer, Alberta. Also online at cgltax.ca.